Hey everybody, welcome to Gauntlet. This is where I, Chris Parry, take a public company CEO and ask him the questions that the IR guys would rather not ask. With us today on our debut episode is Alex Klenman, CEO of Azincourt Energy Corporation, AAZ, on the exchange. How you doing, Alex?
I'm great, Chris. Surviving the wishy-washy markets and just focused on getting the work done.
Well, let's get stuck in. Azincourt. So I got a guy here on staff that the other day I was like, hey, you want to do a story on Azincourt? And he said, can I be honest with you? I've written about Azincourt like 18 times. I need to find out what about Azincourt makes the 19th time sexy. Yeah. So I'm going to put that to you. Like, what is different about Azincourt today than it was over the last year, 2 years, 3 years?
Oh, that's an easy question. I thought it was going to be a lot harder than that.
Oh, don't dare me.
No. So obviously, look, 2 years ago, we were at $100,000 in the bank. We were ignored because we weren't doing anything sexy. We were plodding along, doing a little bit of work on our East Preston project. All the while everybody's watching that, we actually were earning the majority interest in the project. So during those times, and now that's changed. We have 20 or 21, 22 different institutional funds that have invested in the company. We have north of 11 or 12 million in the bank. We're in the middle of conducting our largest drill program to date at East Preston, our flagship project. East Preston is taking years to get to where we're at, millions of dollars of exploration work to get to the drill stage, and now we're actually drilling it in a meaningful way. So that's what's changed, and I think it's also worth pointing out, and I never hesitate pointing this out to people. We're a pre-discovery drill company, and we have north of 10, 11 million in the bank and institutional funds partnering with us. You don't necessarily see institutional funds often investing in pre-discovery explorers. We're the highest risk category in the business, and they don't typically do that. But I think in this case, it's a validation of the work we're doing, the project potential, and the space that we're in. So that's what's changed.
Okay, that's fair. So you've raised a bunch of money recently. So you're cashed up. Is all of that going into the ground?
Yeah, the vast majority of it's going in the ground, 100%. You've known me for a long time. I'm not afraid to market, and I believe marketing is a huge component to what we do. So we'll spend money on marketing, which we always tend to do, but the vast majority of what we do goes into the ground. This is about a $3 million program that we're working right now, so that's a hefty chunk. And then next year we're also going to be drilling East Preston again, because hit or miss, it's got that many targets. We're drilling it again, and we also have a second project that we've committed $1 million spend to next winter. So there'll be 2 drill programs for Azincourt next year. So yes, the funds go in the ground.
Okay. So in 2020, you were sitting around 2 cents. Early 2021, you got up to 18 for a heartbeat. Yeah. There's been a little selling off since then, which you kind of expect. People are going to take the opportunity to turn 2 cents into 5 or 6x. But while a lot of uranium companies were having a bit of a moment, Azincourt dragged its feet a little bit. What do you put that down to?
Yeah, I would disagree with that assessment. And if you look at our chart, you'll look at last fall when uranium was super hot, and Sprott was making headlines with this stuff, and everybody was climbing on board, and the market caps kind of exploded in September and October of last year. We did too. We got up pretty healthy. We had a nice little run up. We were able to attract an enormous amount of money at that point and capitalized on that. But everything's kind of backed off since then. And if you look at one of my favorite uranium companies is Encore Energy, which is run by Bill Sheriff. They have U.S. assets. And if you look at their chart, I mean, they were $2 stock. They're around $1.20 today. So a lot of these things have backed off. A lot of the uranium companies have backed off, and we're not immune from that. the sector's moving in lockstep. When it's green, it's green. When it's red, it's red. And primarily 80-90% of the uranium stocks will move like that in lockstep. So when the sector rebounds, our market cap will climb just simply on that. But I like the fact that we're drilling and there's potential discovery around the corner, which will obviously impact our market cap.
You got a lot of money in from institutions, as you mentioned. Does
Mm-hmm.
that present dangers to the stock down the road?
Yeah, absolutely. I mean, there's no doubt that happens because they have such big positions. And anytime they want to switch gears and move into another space, we saw it in cannabis. They're out, and that could be hurtful. But at the same time, I think we're early enough in the uranium bull that I think their positions are going to ride for a while. They'll give you a year, 2 years for the sector to do its thing and for you to do your thing on the ground. So a couple things have to work together. We have to be successful on the discovery side, and the exploration side, and then we also have to have sentiment in our corner, and that I think is the recipe for success. And we know one of the funds has been selling a little bit, and but not just us, rebalancing a lot of their positions across the sector, but nothing out of the ordinary, and certainly nothing super detrimental to what we're doing.
So for as long as I can remember, uranium's been just around the corner from having a boom. We're sort of looking at it now as, okay, maybe now it's happening, but
yeah,
is it?
I'm like you. I mean, the uranium bull is the mirage that you keep, you move towards, and it keeps moving. I've seen Lawrence of Arabia a dozen times, and I know what those things look like out on the desert. So we're kind of like that. Yeah. But fundamentals they cannot be ignored. And the big driver here really is the U.S. utilities and their ability to sign long-term contracts for fuel supply. And I mean, they aren't operating in a vacuum. They're going to have to sign these contracts. And I can tell you from the production side of the equation, the Camecos of the world have no interest in locking in a 10-year term with the U.S. utility at 55 a pound. The majority of these contracts are going to get inked much higher because the producers didn't wait through a 10-year bear to sell at the first sign of rejuvenation. So, I mean, I have to believe in those things, but we kind of live in an upside down world, don't we?
Increasingly more upside down by the day. So when the military wheels start to turn, does this present an opportunity for uranium investors, or is that still like investing in explorers? I guess, you're still a long way away from taking advantage of military situations today. Yeah.
Well, let's hope not. I mean, the last thing I want to do is sit here and say, well, nuclear proliferation is a good thing for the business I'm in. So I'm hoping that isn't the case. Nuclear power, however, we like, and we believe in the clean energy side of that. And we know that the number of reactors in the pipeline are at pretty much record levels across the planet. So if all things play out logically, then there will always be demand and increased demand for uranium. But I certainly am not one that's hoping that it's a military-induced rejuvenation.
Well, you know how the market works. Sometimes the theory doesn't always translate into reality.
Right. No, but you know what? The great thing is here, we're not getting too distracted by a lot of things. We're getting the work done. We've got crews on the ground right now. The drills are turning, and that's what we said we'd do, and we're doing it. So I'm happy about that.
So this is a pretty expansive drill program, yeah?
Yeah. Well, the best way to look at it is we did 17 holes before this year total. And we're going to do 25 or 30 or maybe 35 this year alone. So, yeah, that's a big deal. And the great thing, and I should mention this, is we can do another 2 programs of this size and not double up in target areas. That's how much target ground we have, 30 kilometers of these conductive trends that are the primary givers of uranium deposition. So this is just the first real pass that we've been able to make.
Okay. So a lot of uranium projects require the theoretical draining of a lake at some point to turn them into productivity. Is yours one of those?
Remains to be seen where the deposition that we hope to find is determined. But we're not miners, and we're not going to pretend to be miners. We're surrounded where we are at East Preston by billions of dollars of market cap with Orano and NextGen and others in the area. So our hope would be that proximity plays into a non-mining situation, i.e., they can grab the reserves and truck them, dig them up and truck them. The targets aren't deep. So I don't think there'll be a mine or there won't be a mill anywhere near us, but certainly the mining of the ore or again, early stage, we really shouldn't be talking about it to be compliant. But if all things play out, I guess that's a great conundrum to be in. And when the question comes, then obviously it won't be about success of exploration.
Right. So you've been around the resource world for a long time. You've been in gold. You've obviously uranium. You've been in other things. You strike me as one of those kinds of guys that you've always got 3 more deals coming beyond the deal that you're in. Which I guess is the way to stay alive when sectors go up and down so quickly. Yeah. Was it always this way? Were sector runs so quick to jump and then die off as they are today?
No, I don't think so. Everything is impatient now. The attention spans are shorter in everything we do, and I don't think it's for the better.
Yeah,
I think it's hurting a lot of companies that are forcing themselves to do things on a quicker timeline before you don't want to take the pie out of the oven too early, and I think you get a lot of that now where companies are reacting and not just sticking to the business side of it. Nothing's really reacting the way it has in the past. You tell me. You remember if our friend in North Korea there shot off a missile, tested a missile 3 years ago, 4 years ago, gold would go up $50 overnight.
Yeah.
Gold's at 1900 and we're about to have an invasion in Ukraine.
Yeah.
5 years ago, gold would have gone $200-$300.
$200 for sure.
Yeah. So it's a different world we live in, and nothing seems to be working as it used to, but everything adjusts and we'll figure it out. And it'll settle.
One thing stays true is that results out of the ground still win the day. So
they may not win the day today, but they are there, and eventually you're going to get your credit for it. The biggest thing that we have in this business is sentiment, and if you don't have sentiment, you're selling grapes to people who want strawberries.
Yeah,
and you're not going to do it, even if you have good results. But you'll get credit for those results. It will come, but in the old days, you might say, we're going to get instant credit for that drill result or that exploration result. I don't know about now. Sometimes there's a delayed reaction.
Yeah. How much do you think Bitcoin's playing into that? It seems to me that there's maybe when Bitcoin drops, I expect gold's going to go up, but it doesn't happen that way. It just seems like money circulates into the next thing and the next thing and the next thing. There's a lot more trading than there is investing. And for the resource market, that's a problematic situation.
Yeah, 100%. I mean, I get people who call me and say, I'm an investor. I bought your shares in the open market. And I hate to be the Debbie Downer. You tell the guy, actually, you're not an investor. You're a speculator. That's okay. That's a good thing. But an investor is someone who buys into a private placement and actually puts money into the company. So when you buy your stock in the open market and then you have a problem with the CEO who's taking a huge salary, well, you're not paying for the salary. The people who did the private placement are actually paying for the salary. So let's just get that straight. I get that. That's fine. Everybody has a place at the table, and that's okay. But it's you can't keep all the people happy. But what you certainly can do is do what you say you're going to do, and that's important.
You know what? If there's one thing I can say about you, it's that you've always done that. Sometimes the game has been geared against you, outside forces.
Sometimes.
But you're that guy that gets up every morning and goes to work, and regardless of the tides. I'd say, if I'm looking at the Azincourt stock chart over the last 3 years, those tides are rising. It's obviously you had at the beginning of 2021 a big jump that it's tough to match up against subsequently.
That was crazy.
Over the course of the last couple of years, you've gone from a 2-cent stock that generally that's the space where people stop paying attention, to a 7 to 10 cent stock where people are starting to take long-term stakes.
And look, there's some pain with that. Obviously, we've got a lot of stock out. That's the main thing I get from a lot of investors and traders and people who buy into the market. You got a lot of stock out there. Yeah, a lot of it's locked up. It's held by the funds, but that's where you've got that other issue that you mentioned. Where there's fear that suddenly a fund's going to say, okay, we're done. Yeah. That can happen. But listen, where there's one fund, there's 20. And other funds might be happy to pick up positions in retail. If we have drill success, which we will at some point, then that answers a lot of questions. We can tighten up capital structure at that point if we need to. We can certainly rest our hats on the fact that we've made discovery, and that's the main thing. That's why the funds bought into the deal.
Yeah, well, I think the thing that people sort of forget about the penny stocks is, man, if you go from 10 cents to 11 cents, that's 10% on your investment in one tick. It takes a lot to get Tesla up 10%. It takes a lot to get Apple up 10%. It takes someone selling $100 worth of stock at the right price.
Yeah, no. I get people like that all the time. They call me and say, hey, you should look at this stock. And it's got a guy just recently said that this oil stock's going to go crazy. You should buy into it. I mean, it's a 50-cent stock and it's great. And I'm thinking, well, if it actually gets to $1, that's a double. Mm-hmm. Then I'd be happy. But if I pick a 5 or a 10 center that's going to have some potential movement, yes, you're absolutely right. Your percentages are better. I prefer that space.
And as well, you get to be the bully at the table, right? It's a small amount of money making a big amount of difference. Look, what does Azincourt look like for you in 6 months if everything is going exactly to plan? Is it just good results out of the ground, or is it partners coming in? Is it more raises to upscale things? Like, what does it look like?
Yeah, no, I don't think we'll be doing any raise of size for some time. If we have drill success in this first pass that we're doing this year, everything changes, because now we're dealing with mineralization, and the project itself jumps. It becomes something else entirely. And now we know what we're doing. We're maybe concentrating in a specific area rather than chasing the other conductive trends. But in a perfect world, because some of us do believe in Santa Claus, I will, if we get that discovery hole in this round, then life changes for Azincourt. We could potentially draw in much more funds. We have a lot of warrants out there with the funds as well. So assuming the stock price moves, we could probably fund through warrants, so we wouldn't have to go back to the market and do another placement. But the funds tend to move like that, right? If you have success, they're going to knock on your door and they may say, listen, we're going to do a bought deal for $10 or $20 million. We want you to develop the project faster. We want to get multiple rigs, et cetera. Anybody in my position who says they wouldn't take that offer is crazy, because you never know when the entire thing falls apart. Yep. And if you're well funded, you can work your way through the bear. So we'll see. But that would be the perfect world for us, where next year we're drilling in zones that have given us mineralization, and also we're also drilling our second project there, Hatchet Lake. So it could be a really big winter next year.
Does the market these days, understanding that like 10 years ago it was all fax lists and email blasts, does the market these days understand good uranium drill results when they emerge?
I don't think so. And I'm not casting aspersions on the IQ of the trading public or the investing public, but uranium is tricky. For example, I'll give you an idea. I'll give you an example here that we see. So last year we drilled 5 holes. We had a small program planned. It got halved because the spring breakup came quickly and we had to get the rigs out of there. We could have drilled longer, but we were risking dropping a rig and a water supply for First Nations, and that's just not going to happen. So we cut it off, which is the right thing to do. But the last 3 holes gave us elevated uranium levels. Now, they weren't mineralized levels. They were 5-6 times background levels. And that's a big deal because now we're getting into something. There are things we need to do to find uranium. We need to find the areas where uranium drops. It's carried through fluids, through the ground. There are different setups that give you the perfect situation where the uranium is going to drop from that fluid. Graphite has something to do with that. There's a lot of, you're looking for specific rock types and rock setups. So if we drill through these areas in this round, that's a positive. Now the market wants drill results. They want uranium.
Right.
They want grade uranium in there, and that's all they're looking for. But if we drill through areas where we're getting the right alteration, extreme alteration, elevated radioactivity, that's a huge positive. If you can imagine, if you look at our website, for example, we have drone footage on there, and in our social media feeds, we pop up drone footage. 25,000 hectares up there isn't 25,000 hectares in density-driven Vancouver. You're in the tundra. Right. 25,000 acres is as far as your eye can see. And there are these zones that run through there, and we have a drill core about that big going in. It is a needle in the haystack. Yeah. But if you have all of the things that we have, all of the evidence that we have, at some point you're going to run into it. Is it the 30th hole? Is it the 100th hole? Some of these things take a couple hundred holes to find. And that's just the reality of it. I mean, one of my favorite stories is Rock's Gold. Rock's Gold made their discovery in the 55 zone. Everybody says, that's great. There must be, 54 other zones. No, the 55 zone was named because it was the 55th hole that they put down. So, yeah, patience, which the market doesn't have much of anymore, is required for a company like Azincourt, for somebody holding shares in Azincourt, because it could take a while. But we're doing it all right. We have all the right evidence. If you're a hunter, and I've used this one way too much, but if you're a hunter and you're looking for bear, you're going to see footprints. But if you step in bear crap, and it's warm, the bear's in the neighborhood. So really, we're looking to step in some warm bear crap. That's probably the easiest way to say it.
Well, let's hope.
Yeah. No, listen. And there's a firewall, so I don't know everything that's going on in the ground. Yeah. The geologists do. But we're optimistic. We've got great ground. It's $3.5 million worth of work to get us to this point. So these are legitimate drill targets, and we have a guy running our exploration, Trevor Perkins, who's made some big discoveries. And so we're in good hands.
I just imagine you like one day the geo shows up at your office and he's got 3 arms and he says, well, the good news is there's radiation.
Yeah. No, I know. I love that. The Simpsons idea of radioactivity. Like that. Yeah, that's good.
Yeah, the 3-eyed fish.
3-eyed fish. Yeah. No, listen, there's radioactivity. We know that. It's getting it in more increasing levels. To me, a drill success this year will be we've hit the right alteration, we've hit the right rocks, we're getting elevated rate, we're closing in on it. It's vectoring in on the discovery. If we get it this early in the program, that's huge. But I'm not impatient, and I'm always a worst case scenario guy. So I'm willing, and so are the funds. So we didn't need $15 million in the last 18 months. Okay? We didn't need that much. We took it because we're a driller.
Yeah.
But they keep giving us money because they realize there's so many targets to drill and it could take a while.
And, if you hit it out of the park, your $30 million valuation is a pittance as to where it could be.
Yeah, no, absolutely. And well, because right now there's not a lot of discovery. You need discovery. You need the potential to be able to replenish stockpiles. And we know McArthur River, and we know some of the big mines can turn on at $50, $55 spot. And Cameco said they're going to do that. All of that wonderful stuff. But even if McArthur, if they flick the switch on McArthur, we're talking 1.5, 2 years before anything's coming out of the ground that's going to be, packaged for a client. So you need to bring more supply into the chain, and that's why if you had told me 5 years ago that Azincourt pre-discovery would have a bank account of $12 million, or at one point we had 14 in there. I would have said, no, not going to happen. You have to have discovery first. But it happened. So that's a good sign. We're in a good space, and
it shows a certain amount of trust in you as the leader of the ship. Like, let's be honest, there's a lot of guys out there that jump from company to company to company based on what's hot. You've been at the wheel on this for a long time, and you've been laying out the case that still exists today. That's like, let's just get drills in, find what's there. We're surrounded by people that are finding stuff. There's a lot more positives here than negatives.
No, and I think the main thing that I was good with was sticking to the JV agreement and earning that majority. I mean, we did it in the bear. In 2017, when I came on board, there wasn't much going on in uranium. It was, $20 spot and $18 spot. And what I thought, okay, while it's quiet, we have to do everything we can to get through this arrangement and earn the majority. Because if we come out the other side and uranium does fly again, and we haven't earned that majority, we're going to be in a netherworld. We need to do that, and we did that. And it was hard to raise the money. And I used to have 6 kids. Now I have 2 because I had to sell 4 to make the money to get us to where we needed to get to. And I say that in jest. In case
I feel like it was a good deal for me, though. They're out back raking the yard. They don't eat much.
No, but seriously, having that many doors slammed in your face toughens you up, but we made it. And so anybody who's stuck around for all those years, we've done this. We're diluted. We're a 5, 6, 7 cent stock, whatever we are today. But here we are. We're cashed up. And we're drilling, and it's exciting. So I'm happy about that.
So we get to the part of the show where I ask you one more prickly question, and that is, which of your competitors do you wish you were in charge of?
Oh, that's interesting.
I look at the guys over at Sky Harbor and think, they're doing some good things. I
love Sky Harbor.
There's some good uranium deals out there that, just need a few things to fall into place. But what's the one where you look at it and lick your lips and say, well, if that gets cheap enough?
Yeah. I mean, you're asking me if I want to be involved with the company or be a shareholder?
But either way.
Okay. Well, I do own some other uranium companies. I mentioned EU only because I've seen Bill Sheriff in action, and don't underestimate that guy. You mentioned Sky Harbor. Sky Harbor is a big favorite of mine. I know Jordan quite well. He's been a phenomenal partner with Azincourt. Couldn't ask for a better JV partner. And I love the model, and I love what he's done. And he's one of the sharpest guys in the business. And so I own shares at Sky Harbor. I should say that. But there's a lot of competitors. And I stick close to home. I've owned a bunch of different ones, and I have to be honest, I lost patience. Because I loaded up last fall in the run up, and I'm not super wealthy. So when I see I'm down 30% in my portfolio and it's going down even further, I had to offload some of those positions. And that's the way it is. But yeah, I mean, look, I like EU. I like the assets. I like Bill. I know what he's capable of. I love Sky Harbor because Jordan is one of the sharpest guys in the business and has been a great partner to us. So those are probably my favorite 2 out there.
I like Sky Harbor a lot. You've got the young energy of Jordan. You've got the wise sage behind him in Bill. Yeah. You've got decades old connections to big money, to family offices, to and a reputation in the market of not screwing over deals.
Yeah, no, and that's what I mean. I mean, they were. It was, as I mentioned, it wasn't easy for us to earn the majority. There were some phone calls to allow us to some flexibility, and he was right on it. So happy to help, and is a guy who is a shareholder personally as well of Azincourt, not so much just on the JV side, but also supports the deal.
Is there one thing about Azincourt that you wish everybody knew?
Well, I think I make no bones about the positives, and I try to help retail understand fear, and so one of the things that everything that drives the market is fear and greed, and there's a lot of fear when you have a capital structure like ours. There's a lot of fear when you have funds holding 60 million shares of the deal, but I also say use that to your advantage. Why do they hold so much? Understand that their due diligence when they invest in a company like Azincourt is pretty tight and pretty strict. And if they're willing to put $3, $4, $5, $10 million in the deal, then feel better about your allocation and your shareholding in the company, because it's backed up by a much stricter, much more professional due diligence process, and that's kind of a validation. I mean, again, I go back to this, I hammer it into the ground, but I don't know of many pre-discovery companies with this level of institutional support. It just typically doesn't happen. So, proud of that.
For any company that's under 10 cents on the market, there's always, especially if you've got a bunch of shares out, there's going to be talk about, well, they're going to have to roll back. It's going to have to happen. What's the likelihood you roll back at some point?
Pretty much nil. And here's the thing: a rollback typically is your project doesn't work, you don't have a viable project, and you haven't got any money, and you haven't got any money, a way to raise it.
Right.
And we don't face any of those issues, which is one of the reasons why we have the share structure we have. It works both ways. It's a bit of a curse, but it's also reality. But I would say, listen, if we get discovery holes and we hit something massive, I would consider a 2-to-1. I mean, I'm not saying we're doing that, or we've even had discussions about it, but it's certainly something that, if the stock's trading at 15 or 20 cents, and we've got 400 or 500 million out, maybe we can have 250 million out and a 40-cent or 50-cent stock. I would need a lot of buy-in for something like that. The board would have to approve it. Shareholders would have to approve it. We'd have to go through, a number of hoops and barrels. But if that's such a worry, it's easily remedied. If the problem is when we don't have any money and we've drilled 115 holes at East Preston and haven't come up with any, now we got a problem.
Right. Generally speaking, I think people fear the rollback a lot more than they really need to. But there are some institutions out there that won't touch a stock under a certain dollar level. So sometimes it's a necessary evil. But man, with all that cash in the bank, you don't have to worry too much about many things.
No, we don't, and that's a great feeling. I mean, look, like I said, we can do 2 more programs of this size that we have in the bank. And that's a great feeling. And knowing that we have the runway to develop the project. If we had 20, 25 holes and that was it, now you're biting your fingernails because you're going, well, what happens if we miss? How are we going to raise again? You don't have that problem. You know, with what's in the bank and with the warrants out there potentially bring in, that we have the capability of funding multiple programs, which is really a good feeling. It's one, quite honestly, I'm not super used to.
Yeah, I was going to say.
Yeah.
If you're not scratching around for pennies behind the couch, do you really know you're alive?
I mean, a lot of people didn't know I was selling pencils on House Street.
Well, there'll be a few people out there joining you, I think, soon enough if things don't turn around. But Alex Klenman, CEO of Azincourt Energy, AAZ is your ticker symbol. And quite frankly, right now, I think you're in sort of buy the dips territory, if I'm being honest.
It's amazing that people are selling the stock while we have drills in the ground.
It really sort of points to the resource investor profile changing over the last few years. It's less a guy who's going to pour through 43 101s and more a guy that's going to go to CEO.ca and see what Frank the Troll 65 has to say.
Yeah. No, and you also, there's the big part of it is a lot of the activity, a lot of liquidity, and a lot of the volume that we see in the markets is algorithms. And algorithms, if you and I traded the way an algorithm traded, we'd be broke. Algorithms buy on green days and sell on red days. They're doing it backwards. And it's a craziness that we have now. But, a lot of the selling could be algos and the likes. And so we're just trying to put the blinders on, not so much stare at the screen, know the drills are turning, and hopefully they drill something spectacular, and life changes for all of us.
As opposed to scratching around in Africa trying to get gold exploration going on.
Don't go there. Yeah, we had a military coup over there recently. It's an interesting place. I try to tell people, listen, 9 out of 10 political moves over there are generated by the military. That's just the way it works.
Yeah. All right, man. Well, thank you for your time. I appreciate it. I think we've managed to ask some prickly questions. You've managed to answer them pretty well. And if anyone out there is not interested in investing in Azincourt, what the hell is wrong with you people?
Couldn't have said it any better myself.
Thanks,
Chris.
man. We'll talk soon.
I appreciate it. Yeah, great to see you. Thank you.